is having a little bit of a coughing fit there. Good morning. Welcome to our Wednesday morning trading room. Let me get the screen share going on here for you. All right. So just a really quick overview here before I get started. I see there's a few new people in the room. Welcome. Please don't be shy about asking questions. What you're looking at here is the complete DTS system along with the Raptor. So here in the top left, I have the Hawk Scalper, top right, Falcon Swing Trader, bottom left, Eagle Trend Trader, and the bottom right is the Raptor. The charts I'm following here are the NASDAQ, and I've also got the 6E and crude oil open. But like I said, if there's a market that's of interest to you, please let me know, and I will do my best to show it to you. All right, a quick overview here. The NASDAQ, relatively quiet until yesterday's close when the bottom fell out of the market. So a huge decline going into the close. That's very likely going to set the tone for the market, at least early on. I think we can anticipate, in spite of the gap, opening gap to the upside, I'm anticipating a possible move lower, just to continue that downtrend that we saw. A trade forecaster saying trend mode in for about the next hour, which would be very welcome. And other than that, we're just kind of on hold here. Let's take a look at the Raptor. So here we had that big turnover. The Raptor firing the cloud crossover signal. Did we get a trend change signal as well? Oh, we did, very early in the session, just before lunch hour. Actually, we got the soft edge sell signal, and then the market eventually falling off from there. Got a couple reversal signals just in the dying minutes of the session, and relatively quiet through the overnight, although the market trying to regain some of that bigger move lower. So ideally what I would like to see from here is a test of the extreme, and now a failure. Come back with another soft edge sell signal. That will be our number 2 signal. It's still very early though. The market just opening up 3-4 minutes ago. Oh, they're continuing to push higher. All right. Oh dear, really? You're going to tempt me with one of those? Well, it's since triggered already, but we've got ourselves a cloud crossover signal. Let's see if I get a chance on a second push entry on that, or if they're just going to run away on me. That's out of reach. I was trying to get the second push entry, and I'd like to cover the trade here below this overnight swing low, but Trade Manager says, nope, sorry, Eric, you can't do it. Well, it looks like they're going to continue to press. Yeah, Aspen says we got a Raptor 1 signal. We do. It was a little bit out of reach for me, though, when I got a little bit late to the party here, and I was going to take a second push signal, but I wanted to cover my trade down here. And I was unable to do that. I suppose I could have covered to the hard edge. I do anticipate that the market is going to continue to rally from here. So if you are long, I think you'll be all right. At least enough to hit our first profit target and get here to the next resistance level, which is 58.85. Like I said, it's still very early here in the session. Aspen says, it's too bad I can't put two orders in at different prices at the same time. You can, but you need to do it the old-fashioned way. You need to right-click and select your order. Now, you need to be aware when you place this order, it's live the moment you put it on your chart, which is why you can move it around. But you could place an order to buy there and another order to buy here if you wanted. So long as you have a stop enabled, Trade Manager will still give you a stop when those orders fill, or if those orders fill. Yes, at Aspen it will trail. Trade Manager will pick up your stops and manage it just as though you set up your trade using your regular parameters. So long as this is checked, Trade Manager will grab your stops wherever they are and move them according to your selected stop strategy. All right, so seems as though we've traded back inside of yesterday's trading range, which was right up here around this 58.80 area, which is where we find ourselves now. And the sellers decided to show up. Oh, thank you. Got my coffee delivery. All right, so it looks as though traders definitely struggling here. I'm watching the Geiger counter. It keeps pulling hard over to the short side. I would very much like to see a test of the extreme here, and which would give me a good reason to try to short. Let's see what the other birds are doing here. Okay, another macro pullback in the hawk. The falcon still holding strong. So far. John's asking, are the bar widths indicating that the sellers may be taking control on the Raptor? Well, they're telling us that there's a lot of volume going through here, more volume than on these thin bars. Chances are that because prices are not heading higher anymore, that there's more selling volume. But we won't know for sure until, of course, we have our test of the extreme and the failure. That's the telltale sign that the buyers are losing their grip on the market. Yeah, Aspen, you might be right. Aspen says it looks like the buyers are running out of steam, quite possibly, but like I said, we won't know for certain until we get that test of the extreme and the failure. Oh, way to go, Steve. Steve says, I want to thank you for your help and the Raptor system. I'm in second part of the combine for Top Step Trader. Wow, $150,000 account. I have profits 14 out of 16 days. Average profit $700. Thanks again for your help. Well, you're most welcome, Steve, and well done. Peter writes, good morning, Eric. Well, good morning, Peter. Peter says, I was on YouTube yesterday looking at some videos on DTS. I saw one on the Day Ranger. Is that one that you use? Yep. Day Ranger. I have the Day Ranger here on the Hawk. And what the Day Ranger shows, as the name implies, the daily ranges. So you can see our 30-day range, or maybe not. I know the type is a little small. 30-day, oh, let me see before I get too far into this. Maybe I can increase the typeface. Okay, there we go. So our average 30-day range 146, 10-day 127, 5-day 154. So what does that tell us? Well, it tells us that short-term the market is kind of expanding a little bit. Yesterday's range, 100 and almost 180 ticks, came primarily toward the end of the session. Today's range we're up to 95 ticks, and that is suggesting that we still have anywhere from 60 to 80 ticks left in the day. So how can you use that? Well, let me get this first micro macro cross signal in play first. And let's see whether we have any other signals to pull on just yet. So if I know that my average range, let's say for easy math, the average range is 150. If I want to allow, say, 15% of the 150 ticks as a stop loss, then I'm going to be running anywhere 22, 23 tick stop loss. If I want to capture, say, 20% of the average daily range as a profit target, then I will be looking at probably a 30 tick profit objective. So that's an easy way to use the day ranger. That font's a little bit big, a little bit scary, but there we go. We'll go back with the default for now. Okay, so it looks like we got a little bit of a tug of war going on here. The problem with this macro pullback signal is there may be a larger test of the extreme here. So getting in right now, it's make sure you can afford this amount because there's a very good chance All right, with a little bit of luck, this is going to get into yellow bars and then I won't need to deal with it. Get up there. Well, we're into the hard edge here on the Eagle. We're into the hard edge on the Raptor. And what I'm doing now is I'm anticipating where the hash mark is going to print. I don't have a complete signal yet. As you can see, I only have the warning dot. And I'm going to follow this a little bit higher. This is now my macro pullback signal on the hawk. And very scary looking signal, if you ask me. Big swing up, very fast swing down. This is the type of trade that makes me very uncomfortable. All right, we have the complete first micro macro cross slash macro pullback signal. Okay, a couple questions here about Top Step I'll get to in just a second. And okay, we're into yellow bars, so that allows me to scrub that trade. Oh, we're actually getting now a hard edge buy. And darn it, they're going to run away on me. All right, you know what? I'm just going to leave this one alone for a moment. If you are taking this hard edge buy, not to panic. It is a valid signal. The market is going to try to retest the highs here. I may hold out for a test of the extreme. and maybe a possible short. Okay, in the meantime, a couple of questions here. Yes, Tony says regarding Steve's earlier comment about Top Step, that's quite an accomplishment, and it certainly is. The other Steve says, I've been trading over 10 years and I don't even profit 14 out of 16 days. I usually profit less than half of my days. Steve, you and I need to talk. But yes, it is. It's very difficult. And Steve did very well with his Top Step Combine. Nicely done. Okay, Francisco's asking, good morning, please tell us about the Top Step Trader. Well, you can actually, there's a lot of information at their website, which is topsteptrader.com. And I'll bring this over here for you just so you can see it. It's, they'll essentially give you money to trade if you're good enough. So you can see here are the requirements. It's really quite simple. Just show them that you can make money and that you pass their very strict risk criteria, and they'll give you money to trade. And it looks as though they're allowing you to keep up to 80% of your profits. So it's an excellent opportunity. And it's funny to see Zumanin's name here because I coached him years ago. Oh, good to see that he's in there. Way to go, Zuminin. This man has no fear. He has zero fear. My biggest challenge with him was to get him to scale back on his positions a little bit. Oh, way to go, Tony. Tony says he scalped out here on this eagle signal. Well done. So this would be our first in-sync eagle signal of the day, a red bar buy, and offering up a little bit of profit as the market tries to retest the highs of the day. You know what, Steve here, Steve D, we'll call you Steve D. He says regarding his Top Step, he says patience is the key, and how true. You know, how true. So many traders feel like they've got to be in the market all the time, or if they miss an opportunity, you know, it's just terrible if you miss an opportunity. Well, no, it's not. Many of you know that I'm a big believer in trading quotas. I don't like to trade too often during the day. I like to hold out for that really strong setup if I can get it. Sometimes here in the trading room I will point out, well, I'll try to point out all the signals to you, but there's always ones that tend to set up a little better than others. So what do I mean by that? Well, like this number 3 signal, not a bad signal. Why? Well, because we're expecting a test of the extreme being up here. So now it just becomes a matter of logistics. Now, unfortunately, I got in a little bit late. By the time I saw this signal, it was already up to here. So that messes up my logistics, right? If I could have entered earlier, you can see I've got a reasonable chance to get to my profit objective before we start to threaten the highs. And even if I don't get to my profit target, I have enough wiggle room in here now that if the market starts to fail and start to close near the low, well, I can snap my trade to break even, or I can run my auto break even and take an early stop out. But trying to do that same thing, from here, well, now I really need to see the market run the highs, and that becomes a lot more difficult. And you can see even managing the trade at this point becomes more difficult. All right, we do have a green bar sell, and some of you are going to be looking at this and say, hey, Eric, is that like a 4-arrow consolidation? Well, kind of. It does have the bear flag shape to it, no question. The buyers are certainly trying to pick it up here, though, which is leaving me to wonder whether or not the sellers are going to try to, or are going to be successful on their next push. How can I tell that, you say? Well, it's just this V-type shape we're getting at the tops and the bottoms. Big swings. Compare that with how the market turned down here. See, we had the little test of the extreme, rallied a little bit, broke the last swing high, had another retest of the extreme, and then the market ends up changing direction. This I find a little bit more predictable. Same thing happened to the top side. It signaled early because the programming interpreted this as the test of the extreme, but even if you missed that, the market comes down, bounces off the hard edge, loses all traction to the upside, comes down, tries to rally again, comes down, a little bit of a rally only to fail again and head lower. We're not having that now. We've got a market that has rallied, and then it turned on its heel, ran down, turned on its heel, and now it's pressing higher. So if I had to choose, I would say they're pretty well balanced here at the moment. Geiger counter, oh, it was leaning a little bit here to the buy side. That's why I said if you were long that number three signal, not to panic. I'm sure, reasonably sure that it would have got you to its profit objective, and it looks like we hit our high probability target, and now the market is starting to flounder a little, which again is characteristic. So I don't know. Is that going to turn itself into a little bit of a double top type thing? We're just kind of sitting here watching and waiting. All right, we got a first macro cross. That's all right. Well, they're trying to turn over a little bit here. So we might be seeing a retest. The Raptor is going to be the one to give us a signal early, I would think. Ooh, I was just going to say the Geiger counter keeps pulling to the short side, but the buyers are fighting it back. Well, they're tailing off here a little bit, but they haven't given me a short signal yet. What's with that? Well, we're still neutral here. It looks like all that early volatility has since dried up. Now we're kind of on hold. All right, well, they're struggling a little. The hawk actually did dip into yellow bars, not low enough that I could get a red bar buy signal, which I could short, but it is setting up that we may get a short signal out of this. Or not. All right, here come the buyers. Buyers refusing to walk away from this market. So still working that number 3. Might get a buy signal here off the Falcon now that we've got the trend line touch. See, that's the easy way to make the market come down. Just talk about how you're going to look at buying the market. Thanks, Steve. Other Steve. Steve says crude oil coming up here in about 9 minutes time. So let's take a look here. Crude on the Raptor. Very, very quiet start to the day. Here's crude oil down here. And just a very tiny range out of crude. Gosh, do I want to bracket a range that tight? The Raptor favoring the short side here at the moment because we are below the clouds. We're actually working on an early cloud crossover. All right, we're going to come back to crude oil here in just a moment. I'm going to answer Jake's question first. Jake asked, why does the Raptor differ with the other chart? Shows a buy on the Raptor and a sell on the other. Okay, each of these charts have been programmed to pick up a specific trading environment. This is not like you're looking at, you know, a 5-minute and a 15-minute and a 30-minute or hourly chart, which is a very crude approximation to what is happening here. If you're looking at a 5 and a 15-minute and an hourly chart, they're all showing you the same thing, but from a different perspective, right? This chart here, the Hawk Scalper, the programming behind this chart is specifically designed to generate signals in a scalping environment. Ditto for the Falcon Swing Trader and for the Eagle Trend Trader. Their programming differs. And the things that you see here displayed on the chart is only a fraction of the programming. There's actually about a half a dozen algorithms working in the background whose criteria have to be met before you even print a warning dot. So there's a lot going on in this programming. The Raptor is a hybrid of the other three. It incorporates elements of the Hawk, the Falcon, and the Eagle all into one. So it is possible to get, say, a scalp sell signal while the Eagle Trend Trader is telling you to go long. The longer term trend may be up, but the short term opportunity may be for a short term scalp. Now that's very, very rare, but it can happen. Normally you're going to find that your best opportunities come when all the signals are in sync. No question about that. But it is something, you know, to bear in mind. Okay, here we're finally getting the soft edge sell. So we'll try to grab that. See if I can't get a little bit of a move here to the short side, and I'll come back to the crude oil chart. Just bear with me here a moment. I got to make a couple notes in my journal before we get too far along. Did we get a positive slip on that? Oh, we did too. Well, that's always nice. Okay, back here now to the crude oil market. Well, there's a couple of ways we can deal with crude oil. Normally what I like to do is I like to bracket the market just as it goes into inventory report if there's been a sideways range. I usually like to see the market trading somewhere in the middle. So if I'm going to follow that strategy this morning, I'm going to place my OCO. I'm probably going to go here above the primary resistance, and I'm going to use a stop limit order. So I'm going to confine myself to a single contract, and I'm going to allow them 3 ticks. Actually, you know what? I'm going to only allow them 2 ticks. So to do this, I now right-click on the chart, and I'm going to buy on a stop limit above the resistance area, and I'm going to short below the support line. Oops, I didn't. Let's try that again. So I'm going to buy a stop limit, and I'm going to sell a stop limit. There we go. So all this does is it contains my slippage, because crude oil, of course, can be insanely gappy. And I'm going to run a tight parabolic stop. And essentially, I'm just going to look for a little bit of a move higher or lower. Now, if you want it to be really aggressive, of course, the range this morning is like this. So you could look to buy above the range and short below the range. But that is a little bit more aggressive than I would care to be with crude oil. The other thing that we can do with crude, of course, is we can allow the report to release and then bracket the range. All right, so crude inventory report coming up here in a moment, and we'll stay with it. Paul's asking, do you think the markets are waiting for the political turmoil to settle? No, not so much. Usually political turmoil makes the markets a little bit more active, actually. I've read some reports that say, or some blogs that traders are thinking the election in the UK tomorrow is holding the market down, which is a possibility, I suppose. All right, so we caught a nice little move here, and we did not get tagged on the short little reverse that occurred. And we're actually picking up a few dollars here, so I'm going to go now with the bar high-low, and I'm going to jam my stops in really tight. Crude does have a way of backing up on itself occasionally. Note how the market broke here through the support area and then retested it. That is so characteristic of the support and resistance lines. Ooh, great move to the downside here. So we're currently 1, 2, 3, 4 zones down. Oh, this is a real money maker here this morning. What are we up so far? $900. Hooray for us! Caught the move of the day. Go crude. Well, this'll help buy a few groceries. Pay the electric bill. support support my Starbucks habit. All right. Okay, so that was a very welcomed crude inventory report. We haven't seen a solid breakout like that for a while now. So glad that I was able to capture part of that. Looks like I might have got a break-even stop out, or did I hit the profit target? No, it looks like I got a break-even stop out here on the soft edge sell signal that I was working. So market coming down. Oh, look at that. Just within a tick of my profit objective, scoundrels. Came back up and tagged me at break even, but the crude oil trade was worth missing the smaller trade that developed here. All right, a couple more questions here. Piotr, nice to see you in the room. Piotr asks, hi Eric, can you please tell me why you think the market is more bearish than bullish right now? Dow Jones a few moments ago just exceeded tops from the last 24 hours. In my opinion, they're looking more buyers right now, but this is just my opinion. Also support at 21,130 looks pretty good for me. All right, bear with me here a moment, and I am going to get a mini Dow chart. Okay, so here's the mini Dow. Okay, that's not looking very good on the Raptor. Let me build a daily chart. We were looking at this the other day. Okay, so right, hold on a second here. I got to fill in some of these gaps. If you're ever looking at a daily chart like this and you don't want to deal with the gaps, you can go to your data series and you can change it over to a minute chart. There's 1,440 minutes in a day. And that will take away a lot of the gappiness that you're looking at. All right, so this now, a daily chart of the Dow is going to look the same for the S&P and the NASDAQ as well, or at least close enough. There's no denying the market is in an uptrend. And more recently, prices have gone parabolic. And I agree 100% that the market is in an uptrend, and I'm not going to get overly bearish on the market until I see a test of the extreme and a failure. But what's been giving me pause, and this is perhaps a little bit more evident on the NASDAQ. So I'll go to the NASDAQ. Here again, the NASDAQ going parabolic on the rally. But this is what's giving me a little bit of pause, is that the market has now broken out of the trading range. See, we've got this breakout up here. Now, normally you would anticipate a breakout like that to be bullish, but in actual fact, a lot of times it's like an exhaustion move, that the market is going to stumble here and it's going to try to get back into the trading range. And when it does, I could see the market pulling back here to 5,700, maybe even making a stab at 56, trying to get below the bottom end of the trading channel. If that happens, then we're going to see a bigger test of the extreme and maybe a major correction, maybe even back down here to 5,300, 5,400. Now, we're a long ways away from that. The market has not confirmed that yet. And I'll tell you the truth, every time I try to short the NASDAQ, more often than not, it turns around and bites me. Here's the E-mini now. The E-mini a little bit more in line with what we're looking at on the mini Dow, but here too we kind of have that breaching or wedging type deal going on. It's really hard to get some lines on the E-mini because it is trading in a rather broad sideways pattern. But I think you're right, Piotr. I think, overall, you're better off trying to be a buyer than a seller. This bar in particular, very strong bar. We should expect a little bit more follow through from that bar, but the fact that it didn't follow through the next couple of days is also a concern. And before we leave this alone entirely, there we go. Let's throw a little volume on here. All right. Normally, the key to understanding volume is that big bars require or should have big volume associated with them. Right? So we got this great big bar here, and the volume is relatively light. What's perhaps a little bit more disturbing is how much volume is on these tiny bars. Like this tiny bar here had 0 volume, which is what you would expect. But look at this bar right here. The one from yesterday's session, it had a lot of volume associated with it. And yet the market didn't go anywhere. Didn't go higher, didn't go lower. And yet there were a lot of contracts that changed hands. This is similar to the what John was asking about this morning with the Raptor. These wide bars, does that imply that there's more selling going on? Well, it can. Certainly, once we get the test of the extreme, it would confirm that yes, there was more selling going on here. But while it's still developing, you don't know whether those are buyers or sellers. That's kind of the situation we have here. We can't say for certain that there's more selling going on here. The only reason this bar painted red is that it closed on slightly lower than it's open. But the fact that there's a lot of volume going through here and no follow through, that's also a little bit concerning. So if you follow volume, anytime you see a tiny bar with big volume, you should sit up and take notice. Likewise, if you see a big bar on light volume or lighter than average volume, that's also something to pay attention to. Because it's almost like the market is running on vapors. But until we get the test of the extreme and the failure, I will remain bullish. However, I could see a pullback to 2420 being very plausible on the E-mini. You're welcome, Piotr. Tony says, yeah, good one on crude oil. About time we had a mover. Ain't that the truth? How many times have we been watching the crude inventory and it's just blah, just nothing. So yes, it was nice to see the market have a little bit of follow through to it. And we'd go, Tony grabbing 20 ticks on the euro dollar on a little upswing. Just a moment, I'll see if I can display that one for you. Okay, so Tony, you must be watching the default settings. I have my euro on the faster settings. Now, not to panic, folks. I only have it on the faster settings because I always have one chart on the faster settings, and that's just in case somebody wants to see the E-mini S&P or soybeans or one of these other tools or instruments that requires the faster settings. So it looks like, Tony, you probably generated a signal somewhere around here. Quick little burst. You can see a lot of trading went through here on the Geiger counter. That probably facilitated that move. Well done. Frederick asks, crude report should be bearish, projected at 3.1 million barrels, came in at plus, or projected at negative 3.1 million barrels, came in at plus 3.3 million. Could mean more downside, but who knows? Do you take that into account? No, I don't. In fact, if it wasn't for you great folks here in the trading room with me, I would be woefully ignorant of most trading reports. Now, crude inventory, of course, it's a weekly report. You look for it. FOMC reports, you should be aware of FOMC days. And then we have, if you follow the agriculturals, the WASDE report is a big one. It's a quarterly. You should pay attention to that. But really, at the end of the day, I trade the chart. You know, if I get a signal, then I take the signal. It always amazes me how often the programming will pick up the underlying market characteristics before reports even come out. And the thing with the reports as well is that, and I've mentioned this before, the news is made to fit the market. And what I mean by that is, okay, crude oil fell off sharply. Where's my crude chart? Oh, shoot. Hold on a second here, folks. Doggone it. Where did I put it? I got too many charts going on here. Okay, so crude oil fell off sharply. The news is going to look and try to figure out why crude oil fell off sharply. That's just how the news works, right? The world through a news reporter's eyes is always cause and effect. So they're going to look around and they're going to say, oh, crude oil fell off sharply because there was such a huge influx of supply, prices went down. If prices rallied off of that report, which they very well could have done, they would have found a reason for prices to rally. They would have said, oh, refineries are breaking down and are offline for repairs. Oh, it's summer driving season. Oh, more people are traveling, so airplane fuel is in high demand, or whatever. They would have found a reason to justify prices going up. And if you think prices can't rally on a bearish report, I got some bad news for you. In fact, it happens so often that traders routinely say prices rally on bullish news and fall on bearish news, or pardon me, the other way around. Prices rally on bearish news and fall on bullish news. So it always boils down to the chart for me. If I have a formation that I can take advantage of, a high probability signal, then that's what I will do. Most reports are minor anyhow. Most reports don't really influence the market all that much. Non-farm payroll is a big one for the stock market, and FOMC. So if you keep a lookout for those, you'll do well. Aspen's asking, Eric, how do you handle the rollover that is happening? Our contracts are expiring, but they're actually not expiring until the 16th. So we've got until the middle of next week. Yes, I know your NinjaTrader is going to prompt you to say, is rollover this week. You better roll over your contracts, but in actual fact, the contract does not expire until next week. John asking, Eric, before you go, what is the TM utility MM that came with my Raptor 2.0? It's probably some of the programming that the trade manager needs. Let me see here. I have an older trade manager. Oh, there it is, Trade Manager Utility MM. Okay. The trade manager requires, for some of the stop systems, it requires a moving average to know what side of the trade to put the stop on. So for instance, if we're going to run the fixed moving average, the trade manager will use that moving average, that TM utility MM, to say that if I'm going to run it off of the high, then the stops need to go on this side. If I'm looking, say, I'm looking to buy and I don't want my stops on that side, all I need to do is put a little minus sign in front, and it will flip it down to the other side. But that's what it is. There's a little invisible moving average through here that Trade Manager uses to know what side it needs to display the stop strategy on. So nothing really you need to worry about. And just a little more on Aspen's question regarding the rollover. I will probably end up rolling over this week just because so many people ask me, Eric, why haven't you rolled over yet? However, I always used to trade the market almost to the second to last day. Volume is still really good in these markets. Just a second here, I will get you a comparison. All right, so here's just a quick comparison of the E-mini S&P. You can see the June contract still far and away the leader. Open interest is the big one as well. But there's more than enough activity in September already if you wanted to roll into the September contract. But it won't be until next week sometime that these numbers actually start to shift. I'm not sure why NinjaTrader gets you to roll so early, but they do. They prompt you. But you don't need to hurry. You don't need to rush to roll. All right, boys and girls. Well, we're kind of in drift mode again. I suspect the buyers are going to try to pick it up here. It just seems like this is the kind of day where we've entered a little bit of a broad sideways trading range. So we opened up here. You know, we keep testing the bottom end, but bouncing. So I suspect they're going to try to get up near the high test, the top end. Remember the daily chart I showed you. We need to see a test of the extreme before the market can truly decline. Other than that, we are still slightly more bullish than bearish. But it looks like, you know, we're trading over top the same ranges that we have been, so we're going to get a lot of overlap, I think. Oh, and here, Trade Forecaster confirming we are in scalp mode for about 3/4 of an hour still, so expect a little bit more sideways choppiness. If you're in crude or looking to trade crude, then I think it's prudent to continue to be a seller. However, you are opening yourself up to the possibility of a rather deep retracement. However, it's very unlikely the buyers are going to be able to put a substantial dent in today's decline. It's more likely that crude oil will drift sideways for the remainder of the session. All right, I think that's probably a good spot to cap the day. We'll do this all over again tomorrow. I will see you then. Talk to you soon. Bye for now.